Hi, this is Mike Maloney, and I'm joined with Jeff Clark once again. And Jeff, we got a lot to talk about. So, what do you got for me?
Yes, we do have a lot to talk about this time, Mike. News of the day, tweet of the day, two charts of the day, some wonderful viewer feedback, and a great meme of the day. So stick around for that. So away we go, Mike. And this first article appeared on Reuters, and it talks about how gold is edging higher because the dollar's going lower and yields are going lower. So if you look at 2021, a lot of the reason that gold and silver have been weak is because yields have been rising and the US dollar has been rising. Now the mainstream is pointing out those things are kind of reversing or at least softening. So, Mike, this begs the question, is the bottom in for gold and silver?
Who knows? This is always a tough one. Lately, it seems like everybody is paying attention to bond yields controlling the price of gold. And gold and silver are a crisis hedge, and we haven't reached the crisis yet. But believe me, there's going to be a crisis sometime or another. It's coming. I don't know exactly when, but it's been a long time since the last major crisis, and they happen every few years. And so bond yields, it used to be inflation was the thing that caused gold to go up, and then it was the dollar going down that would cause gold to go up. And now it's bond yields. But I look at the commitment of traders report, and I look at charts, and I look at sales of precious metals, and the sales of precious metals are definitely saying that the price should be going higher. When you look at transparent gold holdings, though, there have been outflows. So retail sales, a lot of it, the gold holdings in the major depositories and stuff, there's been outflows. So that's suggesting that the price should go down. They're trying to do technical analysis on charting. It's like a guessing game right now. What is your take on this, Jeff?
Well, the point of the article is that instead of these being headwinds, these could actually be tailwinds for gold and silver. And so if that becomes the case, if that trend takes hold, then yes, the bottom would be in. But like you say, who really knows? There's a lot of other issues that can impact gold and silver prices. And the biggest one of which is going to be some type of monetary crisis or shift. And that's when our payday is really going to come. So, well, on to tweet of the day here, Mike. This is actually from you, something you put out, a survey, and it says, which do you think we'll see first, $50 silver or $127,000 Bitcoin? And basically, when you put the survey out, this was roughly a double in each asset from their price at the time. So basically, which one was going to double first? And you can see that while silver got a fair amount of votes, Bitcoin got the majority of the votes, almost 2/3 of the votes. So the sentiment seems a lot stronger on Bitcoin right now. So, Mike, what's your reaction to the results of your survey?
I think it's interesting. I do think that, you know, typically when you bet on something that's already risen by a huge magnitude, there's the potential for loss. And when you bet on something that has been suppressed and hasn't really moved, there's a large potential that it's going to. But sometimes, usually the crowd is always wrong. However, there was a gaming. I don't know if it's still around, but there was a online betting system where they would take bets on just about anything. And there was something that the wisdom of the crowd would very often be right when it came to like calling elections and a whole bunch of other different things where the crowd was better at picking what the future was going to be than all of the professional analysts and commentators and stuff. And so, over the long run, you can't have currency creation on this massive scale and have silver at half of its 1980 high. That's just not possible. And so it will exceed its 1980 high. And once it does, I believe that it's just really off to the races then. And we'll have triple digit silver. I also believe, though, that $127 Bitcoin is entirely possible. And it could happen, in the next year or two. It could happen even in an even shorter time frame. You take a look at Bitcoin's runs in the past, and so far, this is nothing extraordinary.
Yeah, the great thing is we have exposure to both, right, Mike? So, but I think
Yes, absolutely right.
yeah, when monetary issues really rear their ugly head, though, my bet's probably a little more favored on silver. But well, if you're liking this video, please hit the like button below there for us and subscribe to our channel so you make sure you get all our videos. So on to chart of the day, and we actually have two charts here, Mike. This first one is from Dave Collum, and he says, this plot shows the actual price of a Ford I think it means F 150 or something like that, and the Toyota Camry. And it also shows the 24% weighted hedonically adjusted contribution of cars to the CPI. So if you look down here at the price increase of a Camry and the price increase of a Ford pickup truck, and by the way, those are the two most popular selling vehicles, excuse me, in America. The most popular selling truck is the Ford F-150. The Toyota Camry is arguably the most popular selling sedan in the U.S., and yet look at the CPI price of new vehicles. It's hardly risen at all. So, Mike,
Right.
What do you make of this?
This is just confirmation that when I called the CPI, the CP lie in my book, I was correct.
Yes, exactly right. And then there's this other chart from U.S. Global Investors. This week in no inflation, ? Corn prices are up 85% compared to the same time last year, and yet could double before we even see a retreat. So that just shows you the price of Bitcoin, as I like to call it, just rising dramatically. So again, this all ties into your theme of the CPI. The CPI, although it rose last month, is clearly not accounting for the dramatic rise in all of these things. What do you think?
No, it's not accounting for this stuff at all. I've got my own measurement of inflation, cup inflation, currency units per person, CUPP, and every dollar has to go somewhere. And the major components that they aren't measuring here are equities, bonds, and savings. Those are the major components where currency can go. And you can inflate savings, which the Federal Reserve and the Treasury have done with all the stimulus. You can inflate the stock markets, which they keep on doing with quantitative easing and such. And eventually that does leak out. But what I find interesting, you're talking about a change since a year ago, April, except it hangs out around the zero line until August. So really, this change is, it's up about 85%, it looks like 85% from last August. So it's actually happening at a much more accelerated rate than the same time last year. So yes, we have inflation in certain sectors. However, I still expect some sort of major deflation that comes along with a crisis. And that deflation, you have to measure the stock markets and real estate as part of the deflation. And then overall, you'll see that dollars are vanishing from the economy. You will see M2 contract as banks stop writing new loans and don't roll over old short-term loans. I still believe that short-term deflation is coming. Over the long term, though, there's no way that you have to have inflation, because basically it's the quantity of currency times the velocity of the currency. And We've had the pandemic slow velocity while they increased quantity, but the velocity is artificially low. There's pent up demand. As we, there was another article that Dan pointed out to us about all of the ships that are the congestion in the port of Los Angeles, and the ships that are waiting, that are sitting at anchor out off of the port, waiting to get in and offload their goods. The consumer, this is one of the things that's hilarious. We print all these stimulus checks, create currency out of thin air, send it to people, and what do? They buy stuff that's made in Asia. So the stimulus is going over to Asia. Toward the end of the article, it says that the cost for a container coming from Asia to the United States is about $4,000, but going from the west coast of North America to Asia to China is $630, because they're all empty going back. They need to fill them, and the rate coming here is quite high because there's so much demand right now. So that means velocity is picking up, that dollars are changing hands more often, and so that will cause consumer price inflation of things like food and televisions and all of the stuff that isn't counted in the CPI.
Right. It seems pretty clear the CPI is going to be heading higher here, at least in the short term. And I wonder what asset you could buy to protect against rising inflation, Mike, huh? So, well, Mike, here's some great viewer feedback. This is in response to your video last week with Dan Larimer. It's from Glenn Chapman. This is the most important discussion in the world today, and this is the most valuable interview so far in 2021. Having loads of gold, silver, crypto, or fiat is completely worthless if we've lost our freedom, our rights, and our ability to communicate openly and control even over our own bodies. This young man deserves all of our collective help, support, and assistance. I bet you probably agree with that, don't you, Mike?
Absolutely. And, it's all about Dan Larimer and his new book, More Equal Animals. And I would suggest to anybody watching this video, you're watching it because you're interested in precious metals and you're interested in the economy. But go take a look at last week's interview with Dan Larimer, because this is one of the most important topics that there is. How to range, he's come up with ways to arrange society so that when we elect somebody, we select for the very best traits in a human being to be able to make decisions and to honestly be able to control things and be fair. And our current system selects for the worst properties in people, and we end up with very, very low satisfaction ratings for our own government. After we've elected people, the ratings, positive ratings for government people, the level is below 30%. Most people, 70%, more than 70%, believe the government is doing a horrible job. And you can count me among them. This is discussing ways to fix most of the major problems in society, or the problems that any problem that it doesn't address, it fixes the problem that problem flows from. So we have the opportunity to do something great here. I would suggest that everybody watch that video. It's very, very important.
Yes, it is. It's well worth your time. If you've not seen it, we'll put the link below the video here. So, as well as Mike's book, the link is also below, and you could read Mike's book for free. He talks about the CPI, as he dubbed it way back then. There's a section on that in his book, and you can read it for free. So, well, Mike, on to our meme of the day. So I've seen this one. I know what's coming. So tell us about this.
Well, it's Ben Bernanke sort of hugging Janet Yellen, and it's a recreation of a scene from Titanic, but it's interesting that she's got her eyes closed. And, this is the Titanic. The ship is going down. Now, I sort of imagine this with Alan Greenspan hugging Ben Bernanke, hugging Janet Yellen, hugging William Powell. And then there's another Janet Yellen at the helm, and they've all got their eyes closed. What amazes me is that they've been able to paper over things and pull rabbits out of hats now for 20 years. But in doing so, they've pushed us to an imbalance that when this thing does unravel, it's going to be a complete implosion. So I want to thank everybody for watching. We'll see you next time, Jeff.
Thanks, Mike. See you next time.